Hey guys, welcome to Apex Analytics. I just want to do a quick video looking at the question of whether or not the recent crash in the price of Bitcoin is something to be worried about. And to do that, I just want to take a look at the historic prices of Bitcoin so we can put today's activity or the recent activity into context. If we take a look at the historic price of Bitcoin, uh, well, starting at today, we're at about $6,500 US, and that is down from a peak in late December. It was actually close to $20,000 US. So we'll just zoom in a little bit so you can see that more clearly. Here it's at 19, a little over $19,000. Typically, the definition of a bubble is that if you have an asset that doubles in price and then drops in a period of, let's say, a year, and then drops about 40% in value in the subsequent 6 months. That's one way that's commonly defined as a bubble is commonly defined. So that's definitely happened with Bitcoin here. We've got this very sudden rush and then a collapse of about over 50% of the value of Bitcoin from its peak. So that's obviously a little bit worrisome, especially if you bought at the heights and now you've lost half the value of your purchase. However, what we need to do is put this into context. So if you look at the historic prices of Bitcoin, this huge spike and drop seems worrisome. But if we look down here in sort of late 2013, early 2014, we see this little bump here. Well, zooming in on that, it actually looks very similar to what we've got today. So you can see here in early 2013, the price is about $13, and it spiked up here to over $1,000 in about a year later, and then it collapsed from $1,000 to about as low as $400. So you saw a 60% loss of value. That could be very worrisome. And obviously, if you bought at this peak, that's not as good as buying at this low. But when you consider what happened subsequently, so we'll zoom back out, anything that you bought at this point has made a lot of money. So if you spent your $1,000, well, you've made 6 times your money now. If we zoom out again, you can see that we actually had a mini spike here that was kind of the same type of a situation. So you have this spike followed by a collapse. And you can probably see where this is going, because when you look down at the even earlier timelines, you see similar variations in price. So let's zoom in on those. Again, in 2011, we see this huge rush from under $1 to $30 and then down. And if we zoom again, every time from here you'd think, well, there's no volatility in these earlier time periods, but once you zoom in, you start to see these patterns. So we'll zoom in, and you can see this little spike here up to about 40 cents and then down to 24 cents, okay? So from 40 cents whoosh, down to 20 cents. So of course, if you bought at this peak and then it collapsed, you'd feel pretty bad. But put it into context. Every time that it peaks and collapses, it just surges higher and higher and higher. And so from that initial point that we went back to Bitcoin's earliest days, it's 6 cents, and you see these spikes and collapses, spikes and collapses, spikes and collapses, spikes and collapses, spike and collapse today. So the question is Bitcoin likely to spike and collapse again? Is this today's massive looking spike going to be looking like this in the future? That's going to be the subject of my next video. So please hit like and subscribe, and we'll look forward to seeing you in the next video.